changes the context of the week. So taking our fib tool, wick, and wick, hey trader. All right, let's jump straight in. We're going to talk about a context tool today, which is the implied fair value gap. So basically, let's jump over to here. What we want to do is get an idea. Oh, where did my stuff go? There we go. Get an idea of what skills I'm gonna be using this journal for. So context tools are all under the branch of technical skills. Context tools, entry tools, exit tools. So context tools is what I'm going to be dedicating a lot of this channel to. All my journal entries will be more focused on context tools. So that is relevance of things like opening price, different types of gaps, relevance of session times, days of the week, time of day, specifically profiles, seasonal tendencies are context tools, SMT is a context tool, liquidity sweeps pose as context tools. Other technical skills that might come up are entry tools, different types of fair value gaps, different types of blocks, break a block, etc. Exit tools as well, so where there's respective liquidity or gaps. And I'm taking all of this, both technical and psychological skills, from ICT learnings. And so I'm going to use this journal entry technique practice to really frame out and solidify in my mind the context tools. And happy to share this, and if it helps anybody in the trading community, then that's great. The other things that will get touched on, but much less, this is not my area of expertise, risk management tools. And I dub these for me under psychology skills, deciding how much to trade, when not to trade. Because let's be honest, I mean, it's always good to go in and trade, but the real test of risk management is when not to trade, and then how to develop mental state. That's not really going to be the focus of my journal entries. What I really want to use these journal entries for, and if they are going to be any point of reference for myself in the future, at least for now, is focusing on context tools, predominantly profiles, which will incorporate time of day, which will incorporate session times, which will reference opening price, gaps, SMT, liquidity sweeps, seasonal tendencies where appropriate. So with that being said, just to give an idea of what to expect from some of these journal entries, that's really what I'm going to be focusing on. So let's jump in. We'll go to the daily chart. And today's journal entry is going to be a combination of recapping the entire week, but also really focusing in tight on the most recent price action. Not a lot being said right now on the daily. After April opened up, we tested the yearly open and we've been bullish. We're having a small correction phase here. I'm eyeing up the midpoint of this order block because it's a very tricky order block. You know, the price sweep is here, the reference point is this down close candle, there's no real fair value gap, and so looking at this midpoint or the mean threshold. However, an implied fair value gap is rare, and this actually came up, let me check my notes. If you want to hear it from ICT, it's in the February 21, 2023 at about the 2-hour 5-minute mark. 2-hour 5-minute mark, and it's about overlapping candles. So I'm going to look at the day, and we're going to just look at the I'm going to look at the week day by day for this past week, and then I'm going to draw out the implied fair value gap and see the relevance of it. So jumping all the way down to the 5 minute. This is the week, and there are different profiles which I'll touch on going through the week. But from Sunday all the way through to Friday, this is basically what we're looking at. So let me hide these drawings. So we've kind of got this, cascading slow roll week, and after all is said and done, you can see that there is something in and around here. So this whole week was something of a consolidation of two parts. There's a part up here and there's a part down here, if you want to look at it that way. And the news event on Thursday is what pushed us below, and prior to the news event we're kind of above. So let's draw out that daily fair value gap, implied fair value gap, and see how that changes the context of the week. So taking our fib tool, wick, and wick, and I'll make this a blue box. Let's use a nice electric blue. Daily implied fair value gap. Okay, so now let's jump back down to the 5. So it's the consequent encroachment of this wick and this wick where they overlap, and there's a thick body in between. So now on the 5 minute chart, we can see how that implied fair value gap acted as that meaningful area of support or resistance. Now it is only a context tool, so we have to incorporate all other aspects, and I'll do that now as a way to do a journal entry. So starting off with Monday, and I am focusing primarily on PM session trades. So I'm looking to see what the day has to say to me all the way up until lunch, and then in the lunch hour I'm trying to be more mindful of how price action runs, and then in the PM session I'm looking to take some action. So this profile kind of easy to read when you consider this AM low. So here's the AM low. Let's make that bigger. So this AM low is really what framed off the session. So knowing where 930 started off, we drifted lower. So coming from Asian consolidation, price had a small run up, pushed down, created these relative equal highs, took those relative equal highs right around 8 o'clock, created our movement down. Wick, 9:30 AM runs down, we create an AM low right at 11:45. 11:45, price runs back up, comes back into this fair value gap, and contextually we're looking at this daily implied fair value gap. Now this blue box, this daily implied fair value gap, however, is not enough because of time of day. We're looking at it as a target for AM. The daily implied fair value gap is a target for the AM. Then we allow the lunch macro to run. Lunch makes a high, a lower high than the high on lunch. So that's here. So it would look like this: high, low, lower high, dropping into a 15 or 60 minute PDRA. SMT on the lows is ideal. So on the 15 minute, 60 minute, So here on the 60-minute, what I really wanted to show was simply this long wick here, and the consequent encroachment of that wick was where I wanted to pay attention to. The other thing about it, let's move this a bit. So that's where that price action came down to, and then I went down on the 5-minute as I go back in the video. But this was also another area of an implied fair value gap. So if I look at the consequent encroachment of that candle as well, I'm looking for something inside here. Just made this one a slightly lighter blue. Too light. Here. So I'm going to go back into the video, but keep that. Want to keep that in mind for the journal entry, that the consequent encroachment of this wick, which is a 60-minute PD array, or even using the implied fair value gap in this sense, looking for some price action in this area. So we'll jump back into it. Oh, there it is. 5-minute order block, swing high, clearing above buy side, fair value gap, validating the last down close candle, drops in, pushes out. So runs up, time of day relative to 3:30 to 3:45, which is right in here. Price makes a 2-stage move, clears below sell side grab, pushes higher. Context for that day is done. The relevance of the implied fair value gap is as price clears back above after dropping into a discount array, it touches in and moves out. So it creates that area. So we didn't quite get the 15 or 60-minute PD array. We got some context on a 5-minute, and the daily implied fair value gap, once it pushed above, retested once more and then catapulted off. So we're still without any news. Monday through Thursday we're kind of dry on news days. Here we have another scenario where in the AM price runs down. So here's our 9:30 open, price runs down, creates a low. In this case it is a up close, so price moves above daily implied fair value gap, retests, pushes above, creates a bullish shift, fair value gap, validates the order block, tags into the order block, stop below the daily implied fair value gap, price moves up. Price closes the PM session right around the 9:30 open, so we just move back in to consolidate on the 9:30. Next day, Wednesday, still no news. Probably the choppiest day of the week, where Wednesday dips below the daily implied fair value gap. Once it comes back above, tests it, doesn't go below the low that initiated the run above the implied fair value gap. 9:30 open, touches back in to an area in Asia. Nothing interesting for me there. Spikes down, comes back to the implied fair value gap. Even though it's choppy, it still is a consolidation profile. So here what we have, it's a reversal profile where the AM session runs up. We have a lunchtime spike with a run above the AM high. So this is the AM high. Price runs above the AM high, and I think this one had SMT with NQ. Nas was good. Wanted to see something on the high here. So when I took this trade, I want to find it so I can Oh, yeah, sorry. Look a bit more obvious than I was expecting. So here's that SMT. So let's look at these highs here, relative highs here, where price cleared above and price failed to clear above. So SMT, probably had it on NAS too, but wasn't paying attention. So SMT on the highs, which is the SMT on the highs, we know that price needs to run above the AM high. So we'll go back and zoom in on here. So we know that price needs to run above the AM high, which is what we get. And then in the tightest possible way, price comes back after sell side shift, sell side shift, sell side shift, sell side shift, retraces into the order block, pushes down, and then just like the profile kind of suggests, we'll either have a two-stage move down or we'll have some sort of reversal. In this case at about 330 to 345. Here 345, price dips down into daily implied fair value gap, which for all intents and purposes without that context looks almost like nothing. Pushes back up and then just evaporates on the day. So again, the intent here is to realize there are context tools that need to be included in the repertoire so that you can better understand even the trickiest days. Again, focusing on the PM session, but we move now into Thursday. We actually have news on Thursday. The London session runs aggressively down, closes through the implied fair value gap. We have an AM run up. We have an AM high. Similar profile here on Thursday, where price in the PM, so we have that lunchtime move. We tag into the new day opening gap here. Top of the new day opening gap is yellow, bottom is gray. Price runs up, clears the AM high, touches into the new day opening gap, shifts bearish. We have a breakout. Price tags into the breakout plus the order block, runs down, 930 open, good area to take price. And we can use some context tools here. Exits, the extension after your reference point or an extension below a low. So from here to here. So we have two, 930 being a reference point, first standard deviation after it, that one gets tagged. First reference, first swing low reference point after it, that one also gets tagged 315. Then again 330 to 345. Price makes a tag here. Bullish push back up, comes back to the old low here, and then evaporates on the day. Daily implied fair value gap gets really mashed around on that news. We go into the next day, Friday. Daily implied fair value gap, AM run up, price comes down, retests into it, wicks above on this 930. We had some 945 news. So 945 news kind of throws things off. Reference points gets regenerated. It looks like it wants to go long. If anybody was using this as a swing point, broken but not taking the 925 high, price takes everybody's stops. Really what we're looking for, what I'm looking for, is if we have a news event at 9:45, I'm giving it an hour, and then I'm looking at 10:45 as a starting point after news has kind of cleared or done what it needs to do. So and this I know might be very controversial, but news events are not to be trifled with, and so leave them alone. Let the news pass. Come back here now, 10:45. We have an AM rally, so price fails to close below or sweep below the low of 10:45. General movement up where buy side is broken, sell side is not. So intermediary sell side broken, but external sell side not touched. Price runs up, shifts bullish. In the lunch, we have a framing for a 2-session up close. come here. 2 session up close on the lunch price action. So that is to say specifically within lunch, price makes a high, a low, a high. It's now using this leg as a price action leg to make a run up. So let's just zoom in on that real quick. This was the last price action for the day, which was pretty nice, pretty interesting. So in here, depending on your broker feed, there's either a volume imbalance or there isn't. There's either a volume imbalance or there's no volume imbalance. On lunch, we can use the preceding price leg and we allow the lunch leg to seek liquidity. So probably can see it already, but that balanced price range is the liquidity being sought. That's the gap that price is looking to get into and taking 50%. That's the confirmation of the profile, which then shifts bullish. Once it shifts bullish, depending on your feed, some have a volume imbalance between these two candles. There's a small volume imbalance here. The one that I favored today was the volume imbalance in here. You could take your stop below the lunchtime low, because here, this box, this is what is being highlighted as SMT on the lows, and also indicating what is the price leg that we're using to enter. That's the price leg. So this price leg here is what we're using to enter. So either this volume imbalance, first touch, or you're waiting for it to confirm. This volume imbalance, depending on the broker feed, volume imbalance here gets tagged again. So that then would make a run for the highs. We're looking to get above the AM high. The AM high technically is here. Again, day starting at 10:45, not 9:30 because of the news event at 9:45. Otherwise, you'd be thinking the highs are here, which admittedly I had thought at first. Then, as price was running up out of the lunch price action, consecutive green candles was a good sign. Getting above the lunchtime high was a good sign. We ran into big resistance with the daily implied fair value gap. We also have a opposing balanced price range. Balanced price range to balanced price range. Price is expected to make a two-stage move in the PM. So in the PM session, we're looking for a two-stage move. Two-stage move, it means it's going below some form of sell side. So two-stage move, we have sell side here and sell side being created on itself here. Price dips down into that sell side, comes back to volume imbalance, tags the upper one, not the lower, which incidentally, even if you were to just look at this AM move breaking structure, that order block, just kept holding price up, holding price up, holding price up, and contextually stuffing price down is that implied fair value gap. So news events will work some color outside the lines, like ICT likes to say, around these reference points, but we'll ultimately start coming back to them because the algo will not forget it. So even on the profiles that seem kind of tricky, I mean, you know, when you look at it in the context of 10:45 being the time that regular price action starts, 1 hour after the news, then the up close is kind of obvious, right? Opening price, closing price, two session up move, AM rally, lunch seeks liquidity. We have nice consecutive green candles running up. We clear the AM high, which is around here. We get pushback on the implied fair value gap. It's a two-stage move. We clear some sell side, we go back up, we go back into the implied fair value gap. So context helping to frame the day. And I hate being confused around what price action is doing, so that's what really prompted this whole journey. And why I decided to journal and sometimes turn on comments, sometimes don't turn on comments, is wanting to be able to express the analyst skill and putting it out there to say, all right, I've put it out, and future me can look at these videos and say, okay, you know, you were onto something with your PM session model. It's a reinforcement that I can see it in action. So gonna keep doing this. And again, the context lesson for this journal entry is an implied fair value gap. And even on weeks where news might be a little bit stilted, more single day news events or 2-day news events, we can still use the context of the week to be making plays in the PM session and making plays on days when it seems super choppy, and using context tools to understand and get our bearings. So I'll close just by showing that one more time for myself to be reminded. So context tools, and I lost those things again, eh? Where did they go? Oh well. Context tools will include opening price, gaps, session times, days of the week, time of the day, the intraday profiles, the weekly profiles, seasonal tendencies, SMT to get context of, is this a sweep or is this a break, liquidity sweeps themselves. Technical skills will fall also with entry tools, exit tools, and then psychology is where all the risk gets controlled. Deciding how much to trade, even though you're using a calculator, how much to trade can kind of go on how you feel that day. Confident, not confident, willing to stick to one trade, or at risk of, you know, trading multiple. Most important, when not to trade, you can open your chart anytime. You could arguably trade anytime. That's not the trick, or that's not the test. The test is when not to trade. And then being able to control your mental state. So whether that is through physical exercise, meditation, you know, whatever psychology, tips and tricks to help control the mental state, so that you are open to risking appropriately or willing to step away. So gonna keep working on this. This is what's gonna be going through my mind in the background. Almost coming to the end of 1 month PM session only trades, and got 2 more months to go to build this habit and reinforce it. All right, man, let's do it again.